Last night, Bitcoin delivered one of its fastest moves in weeks, a clean, textbook short squeeze. Let's break down what happened and where we may be headed next. So we opened the evening sitting right around $119,000. You could see right here. But under the surface, there was a massive pile of fuel waiting to be ignited. Roughly $1.5 billion in short liquidation leverage sat directly overhead, sitting between $119,000 and $122,000. At 9:45 p.m., I flagged it on Twitter. If the price could push past this first layer of that wall, the squeeze would accelerate. And it didn't take long. Within 30 minutes, Bitcoin ripped to $121,500, as you can see right here, and around $600 million worth of short liquidation leverage was wiped out in that move alone. They were forced to buy back at higher prices and close their positions, pushing the market even higher in a cascading process. But the story didn't end there. As soon as those liquidations cleared, new battle lines were drawn. Shorts re-entered, the market found its temporary ceiling, and sellers began leaning on the order book again. And we've now pulled back to below $119,000. But here's the kicker. Shorts are now even heavier than before the squeeze. The current ratio is roughly 2 shorts for every long, which is more extreme than the setup that triggered last night's run. That's a recipe for another potential explosive upside move. Between here and the all-time high, there's $3.1 billion worth of short leverage sitting like dry tinder. If longs regain momentum and spot demand steps in, that fuel can go up in smoke quickly. And this is where the macro picture comes into play, because when you zoom out, the conditions today rhyme with cycles prior, the late summer of 2020 being a prime example. Price had chopped sideways for months, consolidating multiple times before finally running from $11,000 in August to $64,000 by the end of the year. Now, of course, the market cap is larger, about $2 trillion versus $200 billion in 2020. So it would be foolish to expect another move like that. But even if Bitcoin did just 1/4 of that move, we're talking about $180,000 before year end. And the calendar matters here. We're just 2 weeks from Wall Street being fully back on their desks after summer. September through December is historically one of Bitcoin's strongest stretches. And next month, we're heading into the first maintenance rate cut in over a year. Lower rates mean investors move out on the risk curve, out of fixed income and into things like stocks and Bitcoin. Combine that with a U.S. economy that's holding steady, and you have the setup for capital rotation out of fixed income and into higher beta plays like Bitcoin. And on the structural side, adoption is picking up in ways that matter. Some of the largest banks across the country are experimenting with Bitcoin-backed credit products. Institutional desks have had a front row seat to the ETF inflows, and spot supply remains relatively tight. Put that against demand that's already eclipsing new supply multiple times over, and you can see why these short squeezes can be violent. Shorts aren't just fighting the market, they're fighting an underlying structural adoption trend. The next few weeks will be decisive as to how the rest of the year goes. If shorts continue to pile on and if macro tailwinds kick in as Wall Street's liquidity comes back online, the path to new highs could be faster than most expect. History doesn't repeat exactly, but right now it's rhyming loud enough that it's hard to ignore. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to follow and like, and of course, reshare for more. And of course, check out Horizon. Horizon lets you stack Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.